Citadel just invested $50 million in this underowned, underlooked, and underappreciated pure play AI stock that only has a market cap of about $650 million. The stock is up about 8.5% today on this news. And here in this video, I will explain why this is much bigger than it sounds like. Yes, Citadel just bought about 7% of the company. That's sizable. But there's additional details that need to be clarified, especially before this company reports earnings later in August. So we're going to start off this video with this massive news. Yes, this company is Rezolve AI. I think this is probably the most underlooked AI stock in the markets today. I think this company has 10x potential over the next 12 months. That's my opinion. And I think we have some concrete facts to back it up with. But beyond that, I will go over all of your broader market news today, all of your major headlines, the economic data that came out, what to expect tomorrow with the non-farm payrolls and the unemployment rate as well. Keep in mind, I am not a financial advisor. I am not a financial planner. I do not have insider information into this company. And don't be a jackass. Remember, if you make an investment, that is your choice and your decision. Now, if you guys want to come trade with us, come get access to all of these small cap AI stocks, the ones Wall Street is overlooking and underappreciating that we are investing in, check out that link down below in the description of this video. But on to today's episode. So Rezolve AI posted on their Rezolve AI X account. By the way, the whole company only has 1,900 followers, just to show you how underlooked and underowned this company is. They say, Rezolve AI is pleased to announce a $50 million strategic investment from two new fundamental investors, including Citadel Global Equities, a Citadel company. The CEO, Dan Wagner, said, quote, "This is not just capital, it's conviction capital. Our investments are backing our roadmap because they see the structural transformation we are driving in retail and they understand the ROI profile of our deployments." Now, if you don't know, if you go to Rezolve's website here, they say front and center on the main page, 10% plus boost in online revenue, 8% plus average order value, 25% higher conversions by using the Rezolve AI platform. If you don't know what it is, again, go to the website. You're going to get a lot of different, better information than I'm going to provide here. But it's basically a large language model for online retail. Essentially, the CEO describes it like this. If 10 people go into a Nike store in person with the idea of buying something, 7 out of 10 people are going to end up buying something. If 10 people go to Nike's online website with the idea of buying something, only about 3 people are actually going to buy something. So Rezolve thinks with their AI that is specifically tailored to retail, better answers for questions. Like, for an example, with like sizing on clothes, right? Different brands run at different sizes. If you could ask the LLM, like, what is a comparable, brand size from a company? Like Aeropostale's large is going to be different than Nike's large, right? If you could ask the AI for a comparison between, a large and Nike and a large at another company, what size you should get, that's going to lead to more conversions, right? That's going to lead to you actually going to buy something online, whereas maybe you otherwise wouldn't have. So that's the idea behind Rezolve. Now, they also have Brain Checkout, which if you've ever bought anything on like the TikTok shop, it's kind of like that, or like a Shein or Temu or something. It's like very quick to cash out, right? Saves your information and you can, check out a lot easier. Now, they have partnerships with Microsoft, Google, and Tether. They also, which is not really part of my main investment thesis, but they also want to make it seamless to buy things in person with crypto. Like, go to Starbucks, buy a $5 coffee with crypto, instantly settle that crypto transaction where there's no wait times between, payments getting settled, right? They want to revolutionize how crypto is used in retail payments. That's not the main part of the thesis with the company. That's kind of like a lottery ticket. Like, it could be very successful if it catches on, but it's not part of any of the investment work that I have done with the company. It's a Hail Mary. Consider it as such. Now, back to the news today. Now, this was Citadel Global Equities. Now, Citadel is a big company. Citadel Global Equities Fund, a hedge fund, is approximately $2.1 billion in assets under management. Citadel Global Equities Master Fund is about $12 billion in equities under management. So, assuming Citadel took the majority of this $50 million investment, which is kind of obvious at this point, it's a large position, even for Citadel, right? 2.5%, 5% of the portfolio is kind of what you're looking at here. Okay, from what I can tell, that's sizable. Now, they bought about 7% of the company, which is huge. What's important to understand, though, is this company before last earnings was $1.07. Okay, last earnings, the stock went up like 32% following earnings, and it's up to $3.04 today. But this placement or this investment from Citadel and another firm was at $2.50. So I view it as really valuation support. As Citadel is willing to go in and buy shares at $2.50, how much downside potential do you think there really is at this point? Okay, that's a lot of valuation support from my perspective. Now, what's also interesting is Rezolve is set to report earnings on August 21st. Do you think Citadel would have bought 7% of the company if things were about to be bad on the next earnings? Probably not. So I'm speculating a little bit with that one, but it's safe to say that Citadel probably knows what the earnings is going to look like, right? And they wanted to get in ahead of earnings. Again, at $2.50. With a bad earnings report, the stock theoretically could fall a lot more than that. But the fact that Citadel, before earnings, went out and took a position at $2.50 is a pretty strong sign to me that we're going to have some really good news on earnings. And likely, wouldn't surprise me to get an updated full year guidance or even a 2026 guidance. Also important to remember, this was a SPAC, okay? They went public via a SPAC. So what happens with a SPAC is there's about a year where there's a lot of de-SPAC requirements, like insiders can't buy or sell the company, and a lot of Wall Street firms stay away from de-SPACed companies. Well, that de-SPAC date is around August 17th, right before the earnings, okay? Citadel going out and taking a stake in the company confirms that this is the real deal. This company is something. What's fascinating about this is before the Citadel stake, 42% of the shares were owned by retail, 38% are owned by institutions, which is a huge green flag. Like, the people that run the company are, they get paid when you get paid as the stock goes up, right? They make money as the stock goes up. That's great. About 14% of the company was owned by private investors, and about 5% was owned by Wall Street, like institutions and hedge funds. So virtually, there is zero hedge fund and institutional investment in this company, right? 4 or 5% is nothing. Like, big tech names are going to have 70, 80% ownership by Wall Street, hedge funds and institutions, okay? A lot of it's because of the de-SPAC. So now Citadel is a part of that group, so the ownership percentage is going to be a little bit higher. But after the 1-year de-SPACing is over with, right before earnings, that's when a lot of Wall Street is going to open up to the idea of buying the company. Now, just to kind of give you a rundown of this, Rezolve set guidance for $70 million in AI RRR, annual recurring revenue, by the end of this year. Well, last earnings, they came out and said, nope, we are on track to exceed over $100 million in AI RRR. Okay, and they've had many deals signed since then. This latest deal, again, with Citadel suggests that that could even be raised further. Now, it's hard to value non-profitable, small caps, right? A lot of things go into valuing these kind of companies. Well, most of them, whether you're looking at Nebius or SoundHound or Upstart, doesn't matter what it is, right? Unprofitable AI stocks that are more well-known by Wall Street, they typically have price to sales metrics about 10 or higher. Today, Rezolve, assuming they hit 100 million in ARR, which is probably going to be closer to 150 million by the end of this year, but let's go with 100 million. The company is only about 650 million market cap, so it's trading at about 6.5 times price to sales. About 40% lower than other pure play AI stocks that are comparable. Okay, so just that alone suggests the stock is undervalued relative to its peers, let alone if they come in at 150 million in ARR. The main investment theme, though, in at least the near term, is towards the end of this year, you're going to get 2026 ARR guidance of, I believe, between $300 and $500 million for the end of 2026. At a 10 times price to sales metric, that would put the company anywhere between $3 and $5 billion in market cap. Again, the company's at about 650 million today. Anywhere from 4 to 7x in the next, 6 months or so. Now, if they come in with higher guidance than that, then obviously the stock could go up more. But that's part of the investment thesis right now. And for a pure play AI company, this has to be the most underlooked pure play AI company on the markets today. Oh, and by the way, the company says they're going to be break even on operations, so essentially adjusted EBITDA positive at about 90 million ARR. So by the end of this year, the company should be slightly profitable, or at least break even, which alleviates some of the drag. Again, the company really doesn't have much debt at all. Very minimal amounts of debt relative to the kind of growth that they are experiencing. It's hard to find the crux in this investment. It's hard to find the red flag, if you will. So take it for what you will, do what you want with that information. I do have about $75,000 invested in this company. I believe longer term, 2-3 years from now, could be a $20 billion company. Could be a, 20, 30x opportunity or more. That's just my opinion. Let me know your thoughts on that down below in the comments section. Now let's get into the big news of the day today with Trump and trade and economic data and what's happening in broader markets. Now, in the news today, it was announced that Donald Trump says Mexico gets a 90-day extension to land a trade deal. The Mexican President Sheinbaum says we avoided the increase in tariffs announced for Friday. Sheinbaum says I held a very good phone call with Trump on U.S. tariffs. JP Morgan's CEO Jamie Dimon says so far so good on tariff negotiations. He says we should be a little cautious on rate decision. Trump says we will be talking to Mexico over the next 90 days with the goal of signing a trade deal. Donald Trump on Truth Social said this, quote, I have just concluded a telephone conversation with the president of Mexico, Claudia Sheinbaum, which was very successful in that and more. We are getting to know and understand each other. The complexities of a deal with Mexico are somewhat different than other nations because of both the problems and assets of the border. We have agreed to extend for a 90-day period the exact same deal as we had for the last short period of time. Namely, that Mexico will continue to pay 25% fentanyl tariff, 25% tariff on cars, and 50% tariff on steel, aluminum, and copper. Additionally, Mexico has agreed to immediately terminate its non-tariff trade barriers, of which there were many. We will be talking to Mexico over the next 90 days with the goal of signing a trade deal somewhere within the 90-day period of time or longer. Present at the meeting were Vice President J.D. Vance, blah, 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 all of these other individuals. He says there will be continued cooperation on the border as it relates to all aspects of security, including drugs, drug distribution, and illegal immigration into the United States. Thank you for your attention to this matter. The US today tells the UN Security Council that Trump has made clear a deal to end Russia's war in Ukraine must be done by August 8th. The U.S. tells the UN Security Council the U.S. is prepared to implement additional measures to secure peace in Ukraine. Atlanta Fed GDP Now Q3 GDP estimate is at 2.34%. The estimate was 0.88%. U.S. Chicago PMIs came in at 47.1. Previous month was 40.4 and the forecast was 42. So definitely some positive data from the Chicago region. Trump wrote on Truth Social, wow, Canada has just announced that it is backing statehood for Palestine. That will make it very hard for us to make a trade deal with them. Oh, Canada. Wall Street Journal's Nick Timiraos wrote today that core PCE inflation is beginning to look no better and by some measures worse than where it was when the Fed started to cut last year. That is because today core PCE price index month over month came in at 0.3%. That was pretty much in line with estimates. Okay, last month was 0.2%, so we're not really surprised by the numbers that we got today. Now, personal income month over month came in at 0.3%. The expectation was positive 0.2%, so that was a little bit better than expected. Not really great for the whole, again, argument of a wage price spiral from tariffs. Personal spending month over month came in at 0.3%, a little bit lower than the estimated 0.4%. Initial jobless claims came in at 218,000. The estimate was 224,000, so that was better for the, again, labor market. And Chicago PMIs, again, came in much stronger than expected. So across the board today, a lot of the economic data was really in line with expectations. Challenger job cuts came in at 62,000. The estimate was 71,000. Now, you are getting a fair bit of pressure today on areas like small caps. I'm not super shocked by this for two reasons. First things first, the Fed, okay? The Fed kind of set the precedence that the economic data that we get over the next 6 weeks is going to determine whether or not we get a cut. So anytime we get this strong economic data, it wouldn't surprise me to see a little bit of an underperformance from the Russell, at least in the near term here. Now, you also have big tech that did very well on earnings last night, and it's kind of drawing some of the capital to those stocks, right? When you have a, $3.5 trillion company or $3.7 trillion company shoot up to $4 trillion, drawing hundreds of billions of dollars into the stock, referencing Microsoft here, you're going to see a drag on other areas because there's no such thing as infinite money, right? So that is also causing a bit of a drag on the Russell as well as the Dow today. So it's kind of twofold to why you're getting this underperformance and such a strong performance today from the NASDAQ. Now, today and after hours, we are going to have some earnings that will be very important and, again, cause a lot of volatility in at least the headline index. Here today and after hours, you have earnings from Apple, Amazon, MicroStrategy, Coinbase, Reddit, Riot, Cloudflare, and Roku. Okay, so just Apple and Amazon alone, well over 10% of the S&P. So if those stocks move 10% each, positive or negative, it's going to move the index 1%. That's a lot, okay? So do expect some volatility based on just those earnings alone. Now, tomorrow morning, you have earnings from ExxonMobil, Chevron, Regeneron, T. Rowe Price, Colgate, and some others. But the main story for tomorrow morning is going to be the economic data with non-farm payrolls and the unemployment rate, expecting non-farm payrolls to come in at about 110,000. And then the unemployment rate is expected to rise from 4.1% to 4.2%. You also get ISM manufacturing PMIs that are expected to rise a little bit, and a bunch of secondary, smaller data sets as well. Also in the news today, Mark Zuckerberg of Meta has said that he has seen his, quote, AI systems improving themselves. That's, I don't know if that's, that's kind of a scary headline when AI just starts to do things by themselves. Also in the news today, China has paused US-bound company investment amid a trade war. China has stopped approving outbound investments for companies looking to set up or expand operations in the U.S. amid trade negotiations between the world's two largest economies. Local Chinese governments and state economic planner, the National Development and Reform Commission, have ceased such approvals since April, according to people familiar with the matter. Scott Bessent says, quote, not to panic over tariff rate surges on August 1st. Treasury Secretary Bessent on the Fed and a new Fed chair says expect an announcement by the end of the year. Bessent says he's not sure what the case is for not cutting rates. He says we're seeing a capex boom and this boom will accelerate. I agree with that because of the big beautiful bill and some of the write-off changes. Okay, instead of being able to write off 40% of capital investments, you can now write off 100% of capital investments. I mean, the bill just passed. We're in the very early stages of this, and it will continue, specifically around AI. And that's one reason I'm so bullish on AI over the next 10 years, among many others, many other reasons that is, and a core focus of the trading community, linked down below, again, in the description of this video, if you would like to come try it out. Bessent says we have great momentum in the economy. Bessent on China says this is three-dimensional chess. Bessent says there are still a few technical details to work out with China. U.S. Treasury Secretary Bessent on China says I am confident it will be done. Bessent on China says we'll speak to Trump Thursday about August 12th deadline with China. And Bessent on China says we have the makings of a deal. Bessent on China says Chinese are tough negotiators, which I think is really a sign of respect more than anything. I don't think this is a negative headline. I think he's just saying, China's tough to negotiate with, like, respect to him. Bessent says that India has not been a great global actor. He says on an India trade deal that it will be up to India. And U.S. job cuts reach 806,383 so far in 2025, the highest for January through July since 2020. China has formally rejected U.S. demands to cease Russian oil imports, per the Wall Street Journal. Trump says the Powell is costing the U.S. trillions of dollars. Trump says Jerome is too late. Powell has done it again. Trump says tariffs are making America great and rich again. So let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video to come check out the trading community as well. Have a great rest of your day, and I will see you in the next one.